Welcome to Speak with Eve. I am your host, Eurydice. Today's guest is Jalak Jobanputra. Welcome to the show, Jalak.
Thank you. It's good to be here.
I am very excited about having a conversation with you about Bitcoin and crypto and blockchain because you have been an early prescient investor in the blockchain space. I don't think there were many women like you who started the venture company for Bitcoin and crypto in 2014. That's like 20 years ago. Jalak, just for my audience, you grew up in Nairobi, Kenya. Your parents are Indian. You graduated from Wharton, and you, upon graduation, became a venture capitalist in the internet space.
Graduated Penn and Wharton in '94 and went into investment banking to do M&A, mergers and acquisitions in media and telecom and technology, and was first introduced to the internet during that time, especially when Netscape IPO'd in 1995, and I became really interested in the internet. I went to business school and graduated in 1999 and started my venture career out in Silicon Valley after that. From 1999 to 2003, I was investing during the boom and the bust of the internet, which was a great way to learn the venture and capital industry. And on top of that, I was at Intel Capital, which is one of the largest semiconductor companies in the world. So I got to learn a lot about the actual hardware that is powering the internet, and as we'll get to later, also powering new technologies such as artificial intelligence and cryptocurrency. And when I moved back to the East Coast in 2004, I was at various funds, and about 10 years ago, I decided to start my own fund.
I think that's very courageous because such a small percentage of the world's population or even the American population is familiar with cryptocurrency, other coins and digital assets. For myself, I first read the white paper, the Bitcoin white paper, many years ago. I think I found it through like Jack's profile on Twitter, and it was so inspiring. I was in the Occupy movement. It had no goal. It felt like it led to nothing, partly because there were no natural leaders. Satoshi, for me, had provided a concrete proposal and a possible solution to the problem of like centralized money control and the Fed running the economy on political priorities, using monetary policy basically for national and international political priorities, and the whole, government control of money, which back then, after '08, everyone felt. And I think everyone was shocked by the extent of it. And then when the quantitative easing began to be used non-stop, it benefited Obama for his re-election. I think without it, he wouldn't have been re-elected. For me, on an ideological level, this was just amazing. It was gold, to make an interesting metaphor. But in practical terms, it's very hard to put your trust in it and put your money that you can use in real life into this idea, which is what it was then, of a digital currency like the Bitcoin, which has a set amount of coins and cannot be manipulated from the outside. I'd love to hear a description of where you found that faith and trust and how you propose it to your investors as something that is worth investing in.
Yeah, it's an interesting story, and I think everyone who you described your journey into Bitcoin. I think everybody who were believers early came into it seeking financial sovereignty and financial freedom. Because if you look at things like the financial crisis of 2008, you look at hyperinflation, in places like Argentina, all over Africa, and we've certainly seen a lot of inflationary behavior and that's driven by the United States monetary policy over the last few years. You begin to see that you don't really have control of your own money, and the Fed, the central banks are able to set the policy according to larger objectives, geopolitical objectives that may not have anything to do with the individual and our hard-earned money. And having spent a lot of time in emerging markets, I remember one time, as you mentioned, my family is of Indian descent, and gold is something that women are always given when they
Yeah.
get married. And it's interesting how Bitcoin is now considered a digital gold, the next generation of gold. And the reason gold was given to the women is that they weren't allowed to have bank accounts. They didn't really have assets of their own. And so if they ever needed to leave or be in a situation where they needed something of value, and most of them didn't, work in the old times, they had this gold. And so it's really a store of value. And they could also, bring that gold to other places. So and obviously it's heavy. You can't always bring it, but there's a portability aspect to it. And I went to my first Bitcoin conference in 2013. I had heard about new technology, and my job as a venture capitalist is stay on top of new technologies that other people haven't necessarily heard about. And that's one of the things I enjoy about what I do. It's constant reading and being out there and talking to entrepreneurs. And when I went to this Bitcoin conference, everything just made sense to me about why we needed something like Bitcoin. Having had these experiences before, this concept of this currency that is completely secure and tied to your own wallet, and you could transfer it with very low fees or no fees to somebody else without any bank intervention, and do it instantaneously. And those of us that know the banking sector know that we pay all these fees for our bank accounts. In fact, the less money you have, the more you end up paying for fees. Wire transfers cost money across borders. And we've seen an improvement in all of this, but that's partly because there are new technologies and new assets like Bitcoin that are putting pressure on the current banks to service their customers better. So I just thought of this asset like gold that anyone could have, and what was even more attractive about it than something physical like gold was that it could be transported across borders. So, as long as I had access to that wallet that held my Bitcoin, I could be anywhere in the world, and I could transact with that 24/7. And so, banks are only available, during the weekdays. We can't transfer money during the weekends. We need money. If we have it in our bank account, that's fine. But otherwise, if somebody wants to send us money, it doesn't happen necessarily instantaneously. So I just saw the value in this, especially for people who were underbanked and unbanked. And what gave me comfort, and it certainly was a risky proposition in those days, in 2013 and 2014, where the technology had been developed, but there were still risks around it. What gave me comfort was that I was meeting some of the most brilliant mission-driven minds that I had ever met. And it reminded me of the early internet days where people actually, early on internet entrepreneurs believed in a world where we could have instant access to information. I mean, think of how much education possibilities, how much is opened up because of the internet. And so I thought back to those days and of how mission-driven people were. And it obviously took years and years before, we are where we are with more ubiquitous access to the internet. But I saw the same thing developing around Bitcoin. And beyond Bitcoin, and I think we're in a very exciting time post-election around Bitcoin and digital assets in general. The underlying technology behind it, what makes these transactions secure, this transferability, instant transferability, that whole computing system and the software behind Bitcoin can be applied to any piece of data. So if you start to think about healthcare records, right now, every time we go to a new doctor, we have to rewrite, all of our medical history, and it's burdensome, and it doesn't make sense in this day and age why we have to do that. Imagine if we had these wallets of data that had matching credentials that have been verified. And so I started just thinking of all the ways the internet, impacted our lives in every single way. This blockchain technology that powers Bitcoin could have that same impact down the road.
That's a very useful way to see it, to compare the blockchain space 10 years ago to where the internet was in the early 90s. There was more freedom, for sure. There was a lot more experimentation in the World Wide Web. I do miss those days, I must say, but it's much more regular and widely, if not universally used now. So in exchange for giving up a bunch of our individual, let's say, freedoms and usages, we got the accessibility, which is extraordinary, kind of like dependable access. And I think something similar is happening. Personally, bemoan, the number of whales of huge institutional investors in Bitcoin that have been coming in, especially this year. Extraordinary percentage of Bitcoin now is owned by institutions, which kind of like ideologically isn't wonderful in my opinion, but in exchange, it's encouraging a lot more smaller institutional investors, and then I expect, from there, encouraging millions or even billions more investors to trust it and depend on it. And if they trust it, then it can, become more of what it's supposed to be, which is not just a store of value, but also a form of currency, as gold was.
Yeah, and I think, these large institutions that have been coming into the sector have also made it easier, at least in the United States, for people to buy access. You've been an investor in Bitcoin for a while, and so for us, it seems like we've come a long way with the existing infrastructure, but there were still, a lot of people that weren't comfortable going through some of the other ways of buying Bitcoin, even though they've become more secure over time. And so, I think in some ways it broadened access and legitimized the industry. I didn't necessarily have to be legitimized, but it helps with the regulators, and so I think where the ETFs being approved this past year were certainly a watershed moment.
Yeah.
And while we'd love to see, everyone in the world own at least one Bitcoin, broadening access and making it comfortable for people to buy it is part of the evolution. And we've also seen huge amounts of growth in places like Nigeria and all over Asia. So a lot of the emerging markets, Indonesia, have had some of the fastest growth in terms of holders and it's smaller amounts of Bitcoin, but that's certainly been encouraging over the last 10 years to see how people in emerging markets really value, which is why we became interested in this broader access to assets. And so I'm encouraged. I'm also encouraged on what that means in terms of other cryptocurrencies potentially being held by a broader range of people, and so I think we're just in the early days of seeing what's possible. And once Bitcoin is also legitimized in certain ways, if people want to use it as collateral, banks will allow that over time.
A couple of cities, I think Detroit was just another one where you can use it to pay your taxes, your state taxes, or pay real estate tax. So yeah, I think that is becoming a reality too.
Also being able to use it as collateral, so
to borrow money.
I can borrow money against it without necessarily selling it. So just as an example, about 11% of people in the United States buy property with their Bitcoin holdings.
Yeah.
But they're not transferring the Bitcoin. They're selling it first, and then they're going through transactions to sell it. They have to pay tax to sell it, and then they buy the property with cash. Now imagine if you could just use that as collateral or pay it directly.
Is Michael Saylor borrowing against his Bitcoin holdings, or is he borrowing against the value of his shares?
For MicroStrategy?
Yeah.
There are definitely places where you can borrow against your holdings. just using it as corporate treasury. But the challenge has been that you're over collateralizing usually, so you're pledging more Bitcoin than the actual value, the actual value of what you're collateralizing it against.
To account for the volatility.
Yes, exactly. So I think that's going to change, as there's broader holding of the asset.
I just want to bring attention to this comparison to gold, because I think it's very interesting for people who have not made the decision to invest in Bitcoin in particular, which I consider the safest currently of the digital coins, but they do trust gold, even though the price has not appreciated in a long time. It did this year. When I lived in India, I did remember the beautiful women working the fields, and they're wearing all their jewelry. So this gold was then, as it is now, kind of a borderless global currency. Like if they somehow walked into Indonesia or Pakistan and they could sell, or if they were refugees, they could sell their gold and make money in the local currency. So it's a similar concept, I think. And the difference between the paper money that we use and we trust is that governments can very easily determine what it's worth and if it's worth anything. Like in 2011 it was overnight Greece joined the euro. I'm Greek, and Greece, like the rest of Europe, decided, the banks said, this is illegal tender. Like you have a few days, or it was a month, to take all your drachma people had stored in their houses, bring it to the bank so you can get some euro for it. Otherwise it's useless money. It's like garbage. A government can make a decision like that about fiat currency that can render it meaningless. So that's something to keep in mind in relation to Bitcoin in the future.
Yeah, absolutely. I was in India when they went through the demonetization process. So almost overnight, they deemed that smaller banknotes were not legal tender. And, people in rural areas, farmers, they mostly transacted in these smaller banknotes. And this was all in an effort to get rid of the black market, but it really ended up hurting, people who had the least. And it was a really terrible time for a lot of those folks, where they were told that their it wasn't even inflation. They were just told that these notes would be worthless in 2 weeks. And they don't have banking accounts, so how were they even going to get larger notes, or they may not have been able to get some of those larger notes. So yeah, I think having something to protect, and I actually, Bitcoin was already around when that happened. I think it was 2016 or so, and the price of Bitcoin in India, and back then it was the exchanges where you could buy and sell Bitcoin were very localized. So there was one in Korea, there was one in India, there was one in the U.S. and Hong Kong. And so in India, the price of Bitcoin was about 30% higher during that time period, because there are so many people who wanted to get into Bitcoin because they saw what the government was able to do or could do almost overnight.
When I left India, I had worked there and I had made money. It was, of course, not legal to even turn it into dollars, and it was not legal to take any of it out of the country. I had to spend it all there, which makes no sense. If you're a foreigner working under, like, let's say 6-month contract, then you leave and you have to leave with no money or the money you brought in. Just kind of like forced people to break the law and hide resources, and it made the black market, which you mentioned, vast, like a strong parallel economy, which is what happens in many countries when the economy becomes weak, right? Then the people have to depend on whatever the black market affords them. I wanted to ask you, so how do you account for the criticisms of the coins being Ponzi, which is really only because I think of the volatility?
Yeah, I think there's always going to be bad actors. We have bad actors every industry. That doesn't go away, and especially when you have an unregulated market, an opportunity to make money, and also the kind of anonymity that Bitcoin especially allowed in the early days. Now, it's much more traceable, or easier to trace through different tools. So look, I think I would never call Bitcoin a Ponzi, and I think there are other examples, and maybe cryptos that have been launched and have flamed out that may be, but there certainly whenever you have something that's open for people to buy and transact with, you're going to have speculators and bad actors, and that happens on the internet. And I remember early days of the internet, people said, well, it's only going to be the only use case is porn, basically. That was like the common refrain that I heard. And I'm used to new technology having a lot of criticism. I go back to the entrepreneurs I met, and the reason they were in it in the early days, similar to the internet, was they saw a better, more equitable world from this technology. And so, I don't think we can reject new technology because it can be used in nefarious ways. We just have to make sure, and that's why I'm an investor in early stage startups. We just have to make sure that money flows to the entrepreneurs who do want to use this a new technology to create a more equitable world, because that's certainly what Satoshi intended for it to be. So that's my viewpoint on it. People thought I was crazy to with all this experience to go into this sector that 99% of the at least my world, which was Wall Street and technology, even I'd say it was on the fringe of even Silicon Valley back in 2013. A lot of people thought, we have credit cards, we have banks, we don't need something like this. And so I think only if you were really impacted, from your stories, you certainly saw it firsthand. Unless you've been impacted by it, by our current monetary system in a negative way, you don't really understand what the huge market for something like this would be.
And also, if people do read the white paper that Satoshi Nakamoto published, which was on Halloween, I forget, it was 16 years ago, which is a very short time, and it was called Bitcoin, a peer-to-peer electronic cash system or something. And it was posted on a cryptography server list because the digital asset Bitcoin uses cryptography for the creation, which we call the mining, right, and management of it, rather than central authority. But the writing of it was so ideological. You might as well have read, the manifesto of a new political movement. So I think that a lot of us found a possible practical solution, but much more than that, a possible ideological outlet in a time that there was little hope. The Eastern Bloc had fallen already. Berlin Wall was down. It was just like one system, one market. It was just corporate global market, and that was it. So this was so exciting back then. I am impressed by your career, and I know that you were awarded a Fintech Dealmaker Trailblazer Award, I think by Microsoft. How has your Future Perfect venture done in the past 10 years?
Happy to say that we've raised refunds and have had a great amount of success by investing in the blockchain sector. We certainly, our first fund, which launched in 2014, we've seen many cycles of the companies in that fund, but there's some of the largest kind of survivors from the early days of the crypto sector. And so that's really been, I think part of what you want to do as an early stage investor is not only back technologies that you believe in, but back the teams that have resilience. Because especially in something that is so nascent, and there's so many regulatory issues in the early days, and actually up until I would say this election in the United States, there's still a lot of uncertainty on what the U.S. regulation is going to be. So, you really need to back entrepreneurs who have the resilience, get through those times that, are able to stand by their vision, but pivot it when they need to, and be practical and pragmatic about what that longer term goal is. So I'm really kind of proud of that folio. And then we've also, as sectors develop, been investing investing in a lot of cross-chain initiatives, so not only Bitcoin but Ethereum and the different potential uses. I mentioned healthcare, the media industry. So we've been concerned about deep fakes, and is there a blockchain system where you can actually know where the provenance of the data? So every piece of that video, where was that generated and who was it generated by, and run it through an analytics so right away what the source of this particular video was. So blockchain and that data tracking and provenance, I think, has a lot of potential in the future. And so we're, obviously continuing to invest in exchanges and new technologies around Bitcoin, because we think there's going to be more and more demand for Bitcoin, but also looking at that broader use of blockchain technology. And I have to say, where the two intersect is just the regulation, and there's a lot of potential around how blockchain can be used for loyalty rewards. That right now I have a Delta miles, and that can only be redeemed for certain things within Delta's ecosystem. Now, what if I actually own that myself in a wallet, and then say, okay, I want to use it on United, or use it at Starbucks, and that transaction is able to clear. And the reason a lot of companies didn't even want to use blockchain technology is they were worried about the tokens, and whether regulators would say if they were actual securities, and it would create regulatory issues for these companies. So I think beyond Bitcoin and crypto tokens, what we see in the liquid markets being accepted, I think larger companies are more likely to experiment with the blockchain technology too, now that we have an administration that is open and friendlier to seeing the potential, and regulating it in a way that doesn't impede innovation.
Especially if Mr. Gensler gets replaced.
Yeah, I think that's pretty much a given. That
yeah.
The SEC is going to go through a bit of an overhaul, and whether he gets replaced or resigns, one of those things will happen soon after the new administration is in place.
Senator Cynthia Lummis introduced that bill to implement a 1 million unit Bitcoin purchase program to mirror the size and the scope of the gold reserves. Trump has vowed to create a national Bitcoin reserve for the U.S. So I think that if that takes place, whether or not it helps the economy, and the paying down of the debt, it will definitely help the psychology of the population to kind of trust and at least invest, if nothing else, invest in crypto.
And the beauty of crypto and Bitcoin is, you can buy $5 worth, buy $10 worth. And so, often people say, well, I can't. I remember when it was at $16,000, and people said, I don't have $16,000 to buy it. And
now they would be happy if they had.
But no, I'm just saying that what they didn't understand is that you could buy $10 worth of it, and so whatever you're willing to risk and invest, you can. It's you don't have to have a whole Bitcoin. So it's also a different way of investing, and so I'm just looking forward to more people being comfortable with holding it as an asset.
There are no after hours. It's not centrally controlled like the equities market or the bonds market. You can invest in tiny amounts. Many people who were believers and didn't have money did them weekly or the monthly, invest like $10 a week or $100 a month, something like that. So just give up control. Don't follow it from moment to moment to see the price, but just trust in it and let the money, some money that you would otherwise spend like on an Uber, or a meal out. Go into Bitcoin and see what happens in the long run. And then plan to hold it or hodl it rather than looking to make a quick profit when it goes up in value and selling. That's the ideal, or that's the ideology. What's your opinion about the central bank digital currency?
Well, I think we have to be really careful around those. People often say they look at Bitcoin Bitcoin and they say, well, central bank digital currency is similar. They couldn't be more opposite. and it's something that you mentioned, which is central control, right? And Bitcoin doesn't have any central control. It's a decentralized network computers that verify transactions and keep them stored on ledgers. So if one is a bad transaction, it won't get verified by the network. Whereas central bank digital currencies will be issued by a central bank, and theoretically the central bank can have insight into every transaction that a person has. So right now, if I'm using cash or Bitcoin, unless the government asks for a record, they don't see where I've spent my money. In a central bank digital currency, they would have access to all of that information. So I think there are good aspects of it where you could have a more efficient distribution of, like during COVID, some of the emergency loans, people had to wait a while. And you could argue that with a digitized currency, you could have a quicker distribution of funds like that. Where I get worried is when, a government can just shut off access or use some of the data, against you and in ways that you wouldn't think of. So I think we have to be really careful about what the parameters around these are, feel comfortable around it. I do think we're moving toward, we've been moving towards finance getting more digitized. And certainly the U.S. is behind a lot of countries in terms of, mobile money and other things. But I just worry about more government control if CBDCs were to happen. I think Trump has said he will not allow one under his watch for that reason. We'll see what happens.
And I think, reforming those big solidified or petrified institutions should come first before any such consideration. I mean, that's just my humble opinion. But $2 billion has flowed into Bitcoin ETFs like BlackRock since Trump's election, like 2 or 3 days ago.
It's incredible. I think they've broken ETF records over the course of this week. I mean, Bitcoin had the Bitcoin ETFs were the most successful ETF launch in history, which is ironic when you think about how long,
the resistance.
So many of us, and from the early days, we would never have thought that would happen, that it would be legitimized in such a big way. But in other ways, like you said, there was so much resistance for so long, but you just saw the pent-up demand that people want to have exposure and institution. It's from the person driving a taxi all the way to large institutions want to hold this asset.
And I think that if the US does buy Bitcoin as a strategic reserve, then the European countries will get, fear of missing out, and they will do it, and that will be the next upgrade. So that will create even more trust. Right now, Europeans are more mind controlled, so they're a little behind in this maverick financial mindset than the Americans. The third world has been amazing, partly out of need. Like people in India had their money in cash. They didn't care what the government, they didn't trust the government, to put their money in a savings account. No way. It was like diamonds, gold, and cash. The most anyone would do is have a safe deposit box in the bank and put this stuff in there. That's the India I remember. And I think the third world is pretty much like that. They haven't trusted the government, partly because much of the government was like colonial overlords, but also the democracies can be corrupted by local warlords or tribal allegiances or all kinds of stuff, right? I think wisely they just did not put all of their money into the centralized system. So it's easier for them to go from there to mentality, at least, of crypto wallets. Thank you for coming. I would love to have you back. We can talk about it maybe at the beginning of next year again and see if Bitcoin, which is now at 77,000, will hit 100,000 by the beginning of next year.
To check in every now and then.
Yeah, I think that would be great, and create Bitcoin and blockchain conversation with you that's long-standing. Then my listeners can hear a few episodes. People do binge listen, hear a few episodes in a row, and get more crypto literate. So I would love that.
That would be great. It's great chatting with you today.
Thank you. Thanks for being with us. And everyone out there, until next week, keep speaking freedom, including free money.